5, ladies and gentlemen, we're going to look at the two distinct classes, residential and commercial. By and large, the majority of us are going to be focusing on residential. Residential will typically give us a rate of return somewhere between about 2.5–3.5%. Typically, we can buy a residential investment for as little as $200,000, and the banks love them. They will lend you up to 80% on an investment loan, even more with mortgagees insurance, or in your own principal place of residence, which let's forget that, it is a great investment, can actually borrow up to 95% on your principal place of residence. If we look at the other side of the coin with commercial, commercial is directly tied to the economy. It's a barometer of how the economy is going. So if the economy is not so well, you'll find less people renting commercial property, less demand, and so you'll find the rate of return and indeed the price of commercial can go down. But typically, commercial property will give you up to 3 times the net return of residential property. Also, banks will not borrow quite as much on commercial property. They'll lend you 60 to 66% of it. And there must be a good bona fide lease in place to do that. But with our normal strategy, our mum and dad investors, our first time investors, we start them off on the residential road. Once they've accumulated 4, 5 or 6 residential properties, then we start looking for the higher yielding properties being commercial. And also, as we're heading towards retirement years, we focus on rental income more than capital growth, which is then putting us more in the line of fire of the commercial properties. But by and large, we'll focus on the residential properties. But look, I'd love the opportunity to sit down with you, work out where you need to go, how we need to get there, and what class of property suits you. Thank you.